Well, one of the things that has been a concern globally has been the rise in inflation. And what China has been successful in doing is to take the very sharp rise in commodity prices that have come about because of supply bottlenecks and manage to contain it so that even though factory prices have gone up by over almost 9%, the consumer prices have barely budged above 1%. And that really is a sign of success in administering the price controls in China to temper that supply bottleneck and prevent it from being a spiraling inflation.
And we mentioned that consumer inflation rose just over 1% last month. So how is this impacting spending among consumers?
Well, it's helping consumers to have a higher level of disposable income. One of the concerns about the economy, global economy going forward, especially in China, is that the fears about the pandemic have really not been handled to the point where everyone is confident enough to resume normal life as they had before COVID. In China, retail sales have still not come back to the levels that they were before, and people have to be confident that they have the job stability, income stability, and safety to go out and spend. The lower prices or the lower rate of inflation in consumer prices is helping consumers to gain that confidence.
And that kind of leads into my next question about recovery from the pandemic. So let's broaden things out a little bit and look at China's overall economic recovery. Do you think it's peaked, or do we still have a ways to go in China?
That's a great question, Francis, because the main question in the conversation for every economist I've ever talked to in the last several weeks has been, have we seen peak growth? Have we seen the high peak growth that marks the rebound from the shutdowns of the various global economies because of COVID, or are we going to be having a steadier growth going forward? China being at the forefront of this is really handling the situation in a very different way than other central banks. By lowering the RRR requirement, the required reserve levels, China is allowing liquidity to continue to come into the banks and allowing the banks to continue to lend to provide that level of economic support that might come about, that might be needed because growth may slow. That's a contingency, but also it's something that may be necessary because if the economy starts to slow too much, people will again become concerned that they will not have the income to resume their normal life, and people are going to start saving, which is the last thing you want people to do right now.
Yeah, you talked about the plans from the China's central bank to decrease that amount of money that banks need to hold in reserve. What's your reaction, first of all, for that to happen, and also what impact do you think that will have overall to China's economy?
Well, it goes against the grain of every other central bank, which is trying to hold back on the liquidity being created. I think China is realizing that because it has become such a highly leveraged economy, and because there's going to be so much more in the way of bond issuance by state and local governments going forward in the next several months, the central bank wanted to assure people that there was sufficient liquidity to turn over that level of high leverage and also to preserve the spending power and the lending capacity of banks within China. I think that's a very wise set of policies to put in place because China is in a very special place relative to the rest of the world. It is well in advance of all of the other economies in terms of recovering from COVID, and that kind of precautionary liquidity supply to handle the high level of leverage and at the same time finance spending is a very wise move by the central bank.
And William, we are expecting more economic data that is due out next week, and this is regarding unemployment and GDP, very important numbers there. What might come out of those numbers, do you expect?
The big fear is that GDP will slow and unemployment will rise because the peak growth theory is something that will be tested with these next set of numbers. I suspect the 7.8% growth might be in the cards for China, which is a high level relative to the rest of the world, but again, not quite as high a level of growth that people have been used to coming from China. And this will be the test of whether or not the success of the new policies that the Chinese central bank has put in place will be working.